Thank you for tuning in and welcome back to Home Buying Tips. In today's episode, you'll learn about 5 tips for home buyers in a tight housing market. My name is Andrew Finney. Please consider me your real estate geek. I am always here to help. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you haven't already done so, please go ahead and subscribe to this channel now and like this video. Thank you. To get the most out of this video, you'll want to watch it from start to finish and ask me any questions at the end of this video or share your thoughts in the comments section below. So let's go ahead and start talking about this. So there's 3 main kinds of markets in the United States or around any kind of real estate, and they're going to be a buyer's market, a seller's market, and what's called a balanced market. This video is specifically about tight housing market. So when we're talking about a tight housing market, we're talking about a seller's market. And if you're out there home shopping right now, you may have already made a few offers on a house only to get them rejected or to been beat out by a multiple bid. So the question becomes, how do you buy a house in a tight housing market and get your bid accepted? Well, there's a bunch of different things that you can do, but number one, we want to identify your priorities, especially with determining and sticking to your budget. In a tight housing market, in a seller's market, a lot of time buyers are very, very enticed to try to figure out anything and everything they can do to get a higher pre-approval amount, or to go outside their budget range, or to make more compromises than are absolutely necessary in the financial regards of doing things. Doing that can actually impair your abilities to repay your loan over time and can actually really hurt you on the true cost of home ownership. So before you do that, you want to consider obviously having a great conversation with your trusted real estate advisor, get a great and strong recommendation to a local loan officer, and discuss the true cost of home ownership. I mean, we're talking about your principal, your interest, your property taxes, your homeowner's insurance, accounting for if you have an HOA community that you're looking to buy in, factoring out your utilities and how much it's going to cost in your new place, so that you can come up and determine a monthly budget that's going to be that you can comfortably afford and live with, so that you're not going to be housebroke when you buy your new home. So the first step here is actually sticking to your budget and having that really ensconced in your mind going forward. The second thing is to identify your desired neighborhood and your home wants versus needs. It's really good if you're watching like those HGTVs. It's all fine and well to say, oh, I want this, I want this, I want this, I want this, and that's like kind of a dream because you're seeing it on TV, but it may not be reality when you're out there home shopping. So knowing what you need in your home versus what you want in your home is going to be a big thing. Let's say that you have kids or something, and maybe a specific school district is important to you. Well, there's going to be a lot of different kind of homes in that school district that are going to be available. You might need a decent sized backyard if you have pets, or if you want to have it for your kids to play in. So there are going to be certain non-negotiables. At the same time, there's going to be things that you can negotiate on. You can negotiate on the amount of bedrooms, you can negotiate on the amount of bathrooms or something, or maybe in terms of actual square footage of your home. Now, if you're planning on having family and kids, more than what you already have, let's say that maybe you're married, or let's say that you have one kid and you guys are planning on having another kid. You might want a 4-bedroom home, but at the end of the day, you really need a 3-bedroom home at a minimum, right? So having that realization up front can actually help you in purchasing your new home, especially with your desired location and your wants versus needs. I've made a lot of other videos about this, and I suggest that you watch them and figure out and sit down and chat with your trusted real estate advisor about what the market is doing and what you can do to get your offer accepted. The third thing that you need to be ready to do, and this is one that's really critical, you need to have that trusted real estate advisor and a great relationship up front. The second thing that you need to absolutely get done is have a strong recommendation to a local loan officer and have a loan pre-approval letter. Now, if any lender, if anybody tells you have a loan pre-approval letter and they didn't do and verify your income, your assets, your credit, and your employment, then you don't have a loan pre-approval letter. Don't be fooled by that. It's not as simple as sometimes you hear on television, oh, click here and we'll give you a pre-qualification letter or something. Look, that's complete bogus. It's just not the case. That's not how it works. They're going to have to get your W-2s. They're going to have to get your last 2 years tax returns. They're going to need to verify your bank statements. They're going to need to verify your monthly debts, and they're going to need to verify everything to do with your situation with income, assets, credit, and employment. So it's normally a little bit more of a process. Once you have that done, the third tip, you got to be ready to make a quick decision. In a seller's market, it's a very high-paced, high-fluid movement of the real estate market. You'll see a home go up on the market. You'll see it gone that same day, or within just a few days with multiple bids perhaps. So to be able to win on a multiple bid, or to be able to get your foot in the door first, you need to be working with a savvy buyer agent to help you with that. And you need to be prepared to make a very, very swift decision on what you want. That's why we talked about point number one, determining and sticking to your budget. If you have your budget identified up front, then you already know what your game plan is moving forward. Number two, if you have your home wants versus needs down and you've identified your neighborhood, then you'll be prepared to make then you'll be prepared for point three, which is making a quick decision on purchasing your new home so you can ideally beat out the competition. The fourth point here now is really important as well. Bid competitively. Most of the time whenever people are buying a home, they always want to submit less than the list price, and look, it only makes sense. Everybody wants to get a good deal in their new place. Working with a trusted real estate advisor, you'll know what the property value should be on that home, because the home is still going to have to appraise. A seller can ask for anything that they want underneath the sun, and maybe a buyer's willing to give it to them. But at the end of the day, that home has to appraise, and you're not going to get more loan than the home appraises for. So there's going to have to be a renegotiation somewhere, and the sellers have to understand that. If they don't, then maybe they shouldn't be selling their house, and maybe you should be looking for a different house if they're not going to be reasonable about the appraised value of the property. That being said, there's things that you can do to put your offer ahead of the other competition. You can bid competitively. You can make sure that you're making fair offers, whether it's at list price or slightly above list price, depending on the terms that you're asking for. In a seller's market, you typically do not want to ask for buyer closing costs. They are called buyer closing costs for a reason. Generally, buyer closing costs range between 2% and 4% of a sales price. So if you're looking at a $300,000 home, for instance, that means your buyer closing costs on top of your down payment is going to be roughly 2%. It would be $6,000 to $9,000 on that $300,000 house. You need to be prepared for that up front and have that conversation with your trusted real estate advisor so that you're going to be comfortable and confident every step of the way. You can also limit contingencies, but I definitely, as a professional trusted real estate advisor, I definitely advise and caution you of removing any of your contingencies. You can limit them. You can reduce the time frame maybe on your buyer due diligence, or reduce the time frame on certain things, but don't out and out give up your appraisal contingency, your home inspection contingency. Don't give those things up, because what happens if you get in there and the home inspection just reveals a lot of issues that you just weren't seen from the naked eye, right? Or what happens if the home appraises a lot less than what everybody agreed to, and now you're on the hook for this difference of money? That's not cool. So don't waive those kind of contingencies, but you can limit them, and you can make your offer really, really pop to a seller by offering them what they're asking for if it's fair market value. And you need to get with your trusted real estate advisor to know that. Not asking for your buyer closing cost, and not asking the seller for a lot of different things. That will put you head and tails above anybody else. The fifth point is what we've been talking about throughout this video, finding the trusted real estate advisor. I'll go ahead and pop up a link that I'm with another video that I made about picking a real estate agent, and giving you 9 tips in that video of how to do that. Now, if you have any questions about this video, or if you have any feedback about it, tell us what you're thinking about it. I mean, what really stands out to you in this video? Was it really just sticking to a budget even in a seller's market? Or was it point 2 really being firm and clear on what you're looking for with your home wants versus needs? Or is it point 4 with limiting contingencies but not giving up your contingency rights and different things that you have in the contract that are built in to protect you? Tell us what your thoughts are in the comment section below. I'm going to put my contact information up. If you have any questions about this video, or if you simply want to reach out and say hi, feel free to do so. I always love to hear from you. Now, if you haven't already done so, I'm going to ask you to do 3 things. Number 1, please subscribe to this channel. Number 2, please like this video. Number 3, please share this video around with someone you know it's going to be able to help. Thank you so much for watching today, and between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Enjoy an astounding day.